Hi, I'm James Robinson, and this is my stock pick of the week. So this week, rather than talk to you about a stock that I think is a good buy, obviously things in the market have been bad for the last couple of weeks. The market's down, and it's really caused me to do some introspection. When I started this channel, it was just me putting my videos out there, and I was really doing them 100% for me, and enjoyed it because it gave me a reason to do the research. I wanted to do the research, do a good job. I want to make sure when I posted information that things were well thought out and well researched. What's happened over the last couple of years is I've gained some followers. I now have 90 followers, and videos are starting to get as many as a couple hundred hits, which isn't very much in the scheme of things for the internet, but for me it's kind of gratifying. But the problem is people are starting to take my advice, and they're starting to put real money into the things I suggest. And that's great when you're outperforming the S&P 500, which last year I managed to do all year. But right now I'm underperforming the S&P 500. The S&P 500 is beating me. And I've started to really wonder, how arrogant am I to be coming out here putting advice? What the hell do I know that other people don't know? And so because I've been doing that introspection, I've been thinking about things. I wanted to do a video that kind of gave you guys my thoughts on that process and what I've been thinking. So this video is going to talk about three things. It's going to talk about the correction, what's been happening in the marketplace. We're going to talk a little bit about my thoughts on the coronavirus. And finally, I'm going to talk about some of the opportunities that I see as a result of this correction that's happened. So hopefully you stick around and see what I have to say. So before I go any further, if you want to follow me on Twitter, my Twitter handle is @RobinsonStocks. And if you follow that page, you'll get real-time information. For example, a couple weeks ago, I sold Gilead. I haven't done a video talking about that, but I did tweet it. And I also bought stock in a company last week, which I posted on Twitter. And I haven't gotten around to doing a video on that stock yet, but you can expect that video to come out this week. But in the meantime, you would have got that information real time if you'd follow me on Twitter. So please do that. Also, like everybody on YouTube, I'm looking for subscribers. So please subscribe, please hit the like, hit the bell to get notified, and or comment. I'd love to hear what you have to say, especially about this video, because I'm kind of opening up about things that I've been thinking a lot, and I'd like to hear what you have to say. So I'm posting this video on March 8th, and in January, the S&P 500 was at 3257.85. On March 6th, which was Friday, the S&P closed at 2972.37. So the market for the year is down 9.6%. Obviously, that's very painful. I keep track of these stocks and I watch them, and every day I come to pull up my computer and I see things are worse. And while I had thought the market was overbought, I hadn't done anything about it. I had left myself exposed, which was stupid. I had thought about putting a trailing stop loss on all my positions, and I just didn't do it because I'm not that smart apparently. But when these things occur in the market and the market starts to tumble, it really does cause everybody to really reevaluate. What am I doing? How do I continue to expose? How did I get myself into this position? Why didn't I sell and take my profits? It's a natural reaction, I think. I think that the unnatural part is to not panic, to take a deep breath, to rethink things through, to look at your analysis, and to really decide if you like your companies. Because at the final analysis, if you buy a company at $50 a share because you think it's underpriced, you think it's a solid company, you've done your homework, you believe that it's underpriced already, if it drops from $50 to $40, it's not a bigger risk. It's a less risky company at that point because this solid company is even cheaper. And that's one of the things that I learned from Warren Buffett. And so we're going to talk about my stocks in a minute. We're talking about I've underperformed the market. I've done worse than the market. But it really just should be a reason for you to just recheck your homework and figure out if you still feel the same way about the basic fundamentals of the companies you looked at. The market in the short term can do crazy things. It can overvalue your stocks, and when that happens, we all think we're geniuses. But it can also undervalue your stocks, and when that happens, you can start to think you're an idiot. The truth is you're neither a genius nor an idiot. You're just a guy who's out there picking stocks. And the goal is to, over the long term, pick sensible stocks and allow the market to do what it does in the very long term. So this is the ugly story about how I'm doing so far. I'm down about $22,000 on a $150,000 portfolio. That's about 15%. That's despite having made over 3% in dividends already this year, and that's again the result of the MSM trade that we talked about in earlier videos. But some of my stocks are just down atrociously. The good news is I owned Gilead. Gilead went up very, very significantly. I put a trailing stop loss on Gilead at about 76 or 77 and said if it drops 3%, I'll sell it, but if it doesn't, I'll keep it. It almost immediately dropped. I sold out and we made a 16% return on Gilead, which is fantastic. I'm very, very happy with that. I know Gilead's now trading up higher than it was when I bought it or when I sold it, but you know, you can't go broke taking a profit. So that's the only stock I'm really making, that I've really made money on so far this year. Some of my stocks are down significantly. You know, LyondellBasell's down 26% since January 1st. Robert Half is down 26% since the 1st. Waze, which is Waco Group, is down 19%. Children's Place is down 24%. And the last stock that I bought, SEIC, which I bought on the 2nd, is up fractionally. But long story short, I'm getting killed, right? And it's easy to look at these stocks and to get panicked, and it's very easy for me to look at these stocks and say, man, I'm an idiot. Why would anybody listen to me? Especially when I'm down 15% and the S&P 500 is only down 9%. And so I'm going to talk more about this in a minute, but look, I think it's fair to come clean. Last year in January or in December, I was crowing about how I had done 35%. I mean, the market had only done 22% or whatever it was. And so if I'm going to take credit for it when I'm right, I got to take the blame for it when I'm wrong. And I want you guys to know that I really do think about this stuff and I'm really bothered by it. And I'm doing the best that I can. The market's doing what it's doing, and sometimes you just have to ride it. So like I said, I had this crisis of confidence, and I actually considered whether I should just stop posting and tell people not to follow my advice anymore. Because the pressure of giving advice and then having that advice be bad advice, it gets to me and I don't like it. But I've gone back and I've re-looked at my research for the companies that I own, and I go, God, this is just a great company. Like, it's got no debt and it's paying good dividends and it's in an industry that's solid. And I know things are goofy in the market right now, but I like this company. And I thought that over and over again as I did the research. And I just thought, you know, it's down. This is part of the process. If it was easy, everybody would do it. And so I've kind of, because I've spent the last week and a half not posting and actually doing my research, I feel okay about it. One of the reasons I feel okay about it is because while I haven't been doing it for 50 years, Warren Buffett has, and Graham and Dodd had been doing it for, 50 years before that. And this system works. Nothing works all the time, but value investing does seem to work if you can understand that every time you buy a stock, you're buying a little piece of a business, and that the value of that business literally doesn't change every day, just the price of the stock. And that we're trying to figure out, can we find a company that has an intrinsic value, and can we find a way to buy that stock below its intrinsic value? And part of my model is to have a tremendous amount of discipline. I have, some 170 companies, I think, that I would love to buy, but I don't buy them because I think they're overpriced relative to my model. I'm really, really choosy on the companies that I buy and the companies that I suggest you guys should buy. And so you think about my model, which is following Warren and Buffett and Graham and Dodd and Charlie Munger and Manish Prabhu and all these guys who've really proven over a very, very long time the system works. And the discipline that I've had to not buy companies, even though I think they're great companies, if they're overpriced, and being patient. And you add all that up and you say, look, I still believe in this stuff. So what I can do is the fundamental research that I can do. And what I can do is share that with you. But what I can't do is your research. You need to do your own research. Hopefully you'll take the videos that I post and you'll say, that's interesting. And then you'll go think about it and you'll decide on your own if you want to buy it. I don't think anyone should buy everything that I say, should sell everything that I say. I'm not smarter than anybody else. I'm just trying to give you a perspective that you might not have considered before. So I can give you the perspective, but I can't tell you what's right for you. And I would encourage you to take things slow, to use me as one of a number of sources, not just do what I suggest. And you should be doing your own research, and you should be thinking about these things on your own. You should be deciding whether these companies make sense or not. If you do that, hopefully you'll have some success. And if you have some success, then you'll make some money. And if I can help to participate by giving you some ideas, then that would be great. But it would kill me if people were doing exactly what I said 100% of the time. So now I want to talk about the coronavirus and its effects. So the first thing I want you to know is I don't know anything more about the coronavirus than you do. I've thought about it a lot. I don't know whether the coronavirus is a super flu that's going to, it's slightly more dangerous than the flu. Everyone's going to get it, or some significant percentage of the population is going to get it. Most of us are going to get better, and it's going to be a non-issue. Or whether it's going to be some pandemic plague that's going to be, the apocalypse, or, really damage significant parts of the population and thus parts of the economy. I don't know whether it's going to be a short-term blip or whether it's going to be, a reset for the economy. But this is going to sound really strange, but I'm not sure that it matters to my theory of investing. Here's why I believe that. If it's a short-term blip, and whether short-term is 3 months, 6 months, or 9 months, then at the end of that period of time, let's take PACCAR, which is a manufacturer of trucks. We're going to need less trucks for some period of time, but trucks are going to wear out, and they're going to need to buy new trucks. And so PACCAR may have some stress, but in the long run, the company's going to recover. In the long term, might be 18 months or 2 years or 3 years, but in the long term, PACCAR is going to recover. And when it does, we're going to be fine. If you take the flip side of this and you're a conspiracy theorist guy and you think that it's the end of the world and a significant percentage of the population is going to be hurt by this, or God forbid, killed by this, then I guess it doesn't matter where you put your money, right? The banking system's going to fall apart anyways, and if the banking system falls apart, it all goes to hell. So it's all downside. If you take your money and put it in cash, who says the money's going to be worth anything? Put it in gold, how are you going to buy anything with a bunch of gold bars, right? So I almost think that if you want to prep and take care of yourself, why not? Be safe and take care of your family. But I don't think it makes sense to sell everything that's in the market because you think the world's going to come to an end. If the world comes to an end, whether your money's in the market or not, it doesn't matter. Go buy a gun and buy some bullets and protect your family. But I don't think any of that's really the issue. I think the issue is how big an effect is this going to have on the economy. I think it's going to be relatively small. I think it's going to be relatively short-lived. I think this is a lot of panic and much ado about, not nothing certainly, but much ado about very little. And I think that 6 months from now, we're going to laugh at this like we did about Y2K. I think if I'm wrong and it's a little bit of a problem, then I think we're looking at 6 months or a year of recession and the economy comes back. And the stocks that we're buying today will do well. And if I'm wrong about all that, then, I don't think it matters whether you put your money in the market or pulled your money out of the market. I think we all have a lot bigger problems. So, I have faith in society, and I have faith in our technology, and I have faith in humanity. And I know there's a lot of people that are really worried. I mean, I read today that, 16 million people in Italy are being quarantined. That's a fascinating effect, and I don't understand why. I don't claim to. But again, I think it's all going to be okay. And I think we're going to do great. And I think the economy is going to grow over time. And I think our investments are going to yield profits. And so I'm going to continue to operate as if we're looking at a 3 to 6 month blip, worst case scenario, and we're all going to come back. So let's assume that I'm right, and this is a relatively short-term blip. This is a list of the companies that I have done videos on, that I've suggested you should buy, that are currently trading below where I initially suggested you should buy it, regardless of when I suggest you should buy it. So, for example, Waddell & Reed, I told you to buy it in April 16th of 2019. I told you to buy it $18.77 a share. Today it's trading at $13.55 a share. That's a discount of 27%. Remember, when I told you to buy it at 18, I thought it was underpriced. And now it's trading at $13.55. It's a 27% discount, and it's got a 6% yield. And so you can see that for all of these companies. LyondellBasell, I told you to buy in June at $88 a share. Today it's at $71 a share. That's an 18% dividend, and LyondellBasell is paying a 5.68% dividend. So what I just wanted you to know is that if you go back and you watch the videos on these companies, Walt Disney, PACCAR, Argon, on and on and on, Altria, you're going to see some really, really solid companies. If you watch the videos that I did on those stocks and you really think about them, I think you'll say that these companies are going to recover, they're going to come back. And if you can buy them at a significant discount to when I told you to buy them in the first place, which was a significant discount to the intrinsic value of the companies, the way I saw it back then, there was some real opportunity for profits. In addition, you got to put your money somewhere, and if you put your money in these stocks, they're paying really, really good dividends. If you were to buy every one of these stocks, the aggregate of these stocks is that they're trading at 14% below where I told you traditionally buy them. And they're paying a 4% dividend if you buy them. So buy it and hold it and wait a year, you still made 4% on your money. It's better than leaving it in the bank, right? If you were to select only those stocks from this list that pay a dividend over 4%, I think you choose 9 of those stocks, they'd be at 18% discount relative to where I told you to buy them, and they would pay a 5.6% dividend yield. So again, this is sort of the benefit of me having taken the last 2 weeks and not posted any new stocks to buy. What I've really done is gone back and looked at these stocks. I've rewatched the videos, I've looked at the charts, I've thought about the companies, I've done the homework. I think if you were to sell everything you own and just buy a portfolio that looked something like this, again, don't do exactly what I do, but buy a portfolio that looks exactly like this, I think that portfolio does pretty well over, the not in the short term, but over the medium and long terms. So we're all in this together. I'd love to hear what you have to say. If you like this video, please subscribe and give me your thoughts, especially about the coronavirus. One of the neat things about this is I have followers in over 25 countries now, and I'd love to find out what you guys all think, what's happening in your country, what you're hearing about the coronavirus. Is the press in America telling me different things than your press is telling you? Are you seeing different things in your community than I'm seeing? I know I have a follower in Italy. I'd love to hear what he has to say. So let's just communicate with each other and keep on plugging away. In the meantime, thank you very much for watching this video. I appreciate you hearing my long-winded explanations. This week I will do a video on SAIC, which is a company that I bought last week. It's a company I've been following for 3 years, waiting for an opportunity to buy, and I did buy it. It's literally the highest rated of the 1,000 companies that I looked at. So if you're interested in my analysis of companies, you do want to watch the video that I do on SAIC, the series of videos I do on SAIC this week. Thank you very much. Please subscribe. Have a great week.